Hey guys, Mike here again. I'm just going to do one more video on the Alibaba risks. I did a specific video on the delisting risk, and I'll retouch on delisting today, but I just wanted to touch on a few other items that I hear quite a lot of conversation about when I'm reading about Alibaba. So I'll go through delisting, regulatory crackdown, Taiwan, Chinese economy slowing, and the Alibaba specific growth slowing as a company. So I'll go through those five things in this video. First up, we got some really positive news since I did that video on delisting, and I'm sure everybody here has seen this stuff, but I'll just go over it really quickly. It says here, Chinese authorities are preparing to give the U.S. regulators full access to auditing reports of the majority of the 200 plus companies listed in New York as soon as mid this year. Now, this isn't directly from the Chinese authorities, but it is from an unnamed source on the inside, and I haven't heard them refute this since then. So it looks to me like this may be legitimate. Now, so that's really positive. So that lifts almost lifts the cloud off the delisting problem. However, there was a further statement here that I'll read that leaves some questions to be answered. So it says, however, the government is prepared to accept that some state-owned enterprises and private companies that hold sensitive data will be delisted. Okay, so now we don't know what that means specifically. Now, Alibaba has a whole lot of data, as we know from their huge customer base. So it's possible that Alibaba is one of these companies. Again, I don't know, but I'm marking this as a maybe. It's still in the maybe pile, but I think the real positive here is that the Chinese government is basically saying, we're going to play ball. We want our companies to stay on the exchange, so we're going to play ball, and we're only going to let our companies be delisted if we think they have to be. So that's pretty good news for the Chinese market as a whole, with anything with overseas listings. Yeah, so that's the update on that one. All right, next up is the regulatory crackdown. Now, if we remember back, this is actually the thing that started the whole collapse for Alibaba, and it was the biggest problem for quite a long time. So we have some really positive news here. Now, it's not the government's not saying that it's over. However, this on the 16th of March, they put out a statement and they said basically regulators should complete as soon as possible the crackdown on internet platform companies. Now, this is from a senior official on the government's finance committee and also a member of the CCP. Now, so this is a big deal. This is a legitimate statement, and I think this is one of the best things that has happened to these kinds of companies in quite a while. So, yeah, let's just remember back and say this is the reason Alibaba collapsed in the first place. Now, Alibaba is not the same company that it was when these regulations started. It's actually quite well, it's not a lot different, but they have lost a few things in the process, specifically their sketchy monopoly that they had been running. And so I've said it in past videos, I think it's fine that they're not allowed to do this anymore. What the kind of behavior they were engaged in actually wouldn't fly in any developed markets. So it's good that the CCP actually put an end to this, and now we get to see how Alibaba can stand on its own 2 feet without forcing people to not list on other sites as well. Now that we have had a huge, there has been a fairly big hit to growth here while they've got used to this new regulation, but I think overall the company is going to be fine. They've spent a lot of money on re-energizing their growth in the Chinese market, and I think it's about to pay dividends in 2022. Okay, I'll also touch on Taiwan now. Taiwan is a bit of an odd one. and the fears around Taiwan have been restoked because of the Ukraine invasion, and a lot of people took this invasion in Ukraine to think that, okay, now China and Russia are friends. China's not going to stop Russia from invading Ukraine, and in turn, the Russians won't stop, won't say anything if the Chinese invade Taiwan. Now, I actually disagree with this. I think that if you're looking at this from a Chinese perspective, I think that the risk of invading Taiwan is actually lower than it was prior to Ukraine, because I think that, this is just my take on it, is that I don't think China wants to have these kind of sanctions put on them by the rest of the world, as their economy is almost completely dependent on trade with developed countries. And I believe that the CCP is more interested in protecting their middle class and lower class citizens than maybe Putin is. I think Putin is maybe following an agenda that's his own agenda, and basically to hell with if this hurts the people in Russia. Now, maybe that's wrong. I don't really know. It's hard to get any accurate information these days on this kind of stuff. So, but I do believe that the Taiwan risk is probably lower now than it was a couple of months ago. Now, that being said, I actually think that it's highly likely that at some point there is going to be a Taiwan problem. China seems very intent on having Taiwan as part of China generally, but I don't know when that's going to happen. It could happen soon, and it could happen 100 years from now, or anywhere in between. So as I'm investing in Alibaba, I'm accepting that that's a risk at some point, a risk out there. It's a legitimate risk. If China decides to make a move on Taiwan, then this could hurt stocks, Chinese stocks. So I'm not sure exactly what I'm going to do yet. If we see a similar situation like the tanks on the Ukrainian border, I may choose to sell my Chinese shares just to wait till the coast is clear again. That's sort of the way I'm leaning right now. But may have to wait to see how things play out. Now, there should be I do believe there should be a small discount based on this possibility in the future. And I wouldn't, there is more political risk on this front than, say, investing in American shares or things like that. But from where I'm sitting, I think that the discount on Chinese shares versus, let's say, American shares is far too deep. I mean, they're trading at, let's say, a third the price. A lot of them are trading at the third or less of the price that they would be trading at if they were listed in the US based on their fundamentals. So I think this is over discounted right now, and that's part of the thing that I like. Now, just one more thing on this subject. I was reading this book, and I don't know if it's going to show up backwards in the video, but I highly recommend this book if you're interested in investing in China. It talks about the interaction between incumbent powers and rising powers, so that'd be the U.S. and China specifically. But it goes all the way back to the 1500s and looks at how the powerful nations decline and the rising powers sort of take over. So there's a bunch of things that happen pretty consistently in those dynamics. So if you're interested, I highly recommend it. And in terms of Taiwan, one of the things that Ray Dalio says is that if there's going to be a conflict, like a hot war, as he calls it, he says the U.S. and China are already in a technology war and a financial war. So keep that in mind at this point. But if they ever get involved in a hot war, then it benefits the United States to have a conflict earlier while they're still more powerful, and it benefits China to have a conflict later down the road after the U.S. continues to decline and they continue to rise. So in that framework, it doesn't actually make sense for China to do anything now. They may want to wait on this one until the U.S. Is maybe too weak to even want to put up a fight. or they're at a point where they're sure they're going to be able to win. So keep that in mind. This is all speculation. I don't really know. I'm just applying a discount, and I'm expecting this is going to be a problem. If I hold Alibaba for 20 years, it might be a problem at some point. You know, we may have some aircraft carriers lined up outside Taiwan. Okay, in terms of the general risk around the Chinese economy slowing, now I've heard a lot of people talk very negatively about this. We have the Chinese zero COVID policy, where they're basically trying to eradicate COVID still, and the rest of the world has basically said, you know what, we give up the virus one, let's live with it. And there's much less of an economic impact if you take that second road, which China hasn't decided to do yet. And it looks like their Q1 growth rate is going to be hindered because of this. There's big lockdowns in Shanghai right now. And I guess for me, this is actually an opportunity, because the conversation around it is so negative in terms of these slowing growth rates. I believe that there's two reasons why this is an opportunity. So number one is the growth rate is temporary, or the growth slowdown is temporary. There will be a quarter here at some point where the growth rate ticks up, and that will reverse this whole conversation, this whole narrative around China is slowing. Now, if China slows down every quarter for the next 10 years, okay, then I'll be wrong. But I think that's highly unlikely. If you look at these kinds of things in history, they oscillate. They oscillate from pessimism to optimism, growth to declining growth or negative growth. And basically, if you have a time frame of holding longer than the market's view, then you can take advantage of this this short-sighted view that the market has. So basically, I think this is temporary, and it's just depressing prices and getting me better deals on some of these stocks. And I guess my other point would be that, the latest number I think I saw was their new projection for 2022 is 5% growth, down from 5.5%. And so this is supposed to be a really negative number because their historical numbers are quite high. Now, even if it slows down to 4.5% because of more COVID lockdowns, that is still incredibly fast compared to any developed market. And I think that I would rather have a scary, terrible 4.5% growth rate as a tailwind than a wonderful, oh, look how hot the economy is doing, 2.5% in the US. Because if you just look at those from absolute perspective, you're going to benefit more as a company in the 4.5% environment than you are in the 2.5% environment, all else being equal. So I think this is I really think this risk is ridiculous, and the market's view on it is ridiculous and super short term. So I'm trying to take advantage of that. The last risk here is that Alibaba's growth rates have slowed quite considerably in the last 12 months, and this is a legitimate risk. This is one that we should be really paying attention to as investors. I'm keeping a close eye on it. I guess right now I touched on it in another video and basically said they haven't pulled their guidance for the year, their year which ended on March 31st. And they haven't pulled that guidance. And so if they actually hit their guidance target, then Q1 should come in between 13 and 24%. So that will be an uptick from the third quarter 22 numbers, which came in at a pretty dismal 10%. So I think that will, if they do hit their guidance for the year, then it will put some positive momentum under the stock, because you'll see an acceleration from Q3 to Q4. Now, it's possible that because of these problems they're having economically right now, they may actually underperform. Those guidance targets were before any of the recent COVID lockdowns and all that kind of stuff. So it's possible that they get hit by that stuff, and Q4 is not great. But I think, again, with the view that I'm trying to look a little bit further out than the market. I think that the 2022 numbers for them in terms of growth rates were really absorbing some of these new regulations, and it's a bit of a COVID hangover year. So I think that there was an expected slowdown in their growth. And I think as situations normalize and they get used to their new regulatory environment, and some of these big projects that they have in the pipeline start bearing fruit, like their cloud arm or their international commerce, these growth rates will pick up considerably. Oh, and also they've one of the reasons that their profitability has suffered in 2022 is because they really spent a lot of money investing in their China commerce division. And I think that's going to start bearing some growth fruit at some point as well. So bottom line is I don't think that the growth party's over. I do think that the years of 30% growth are probably behind us, but I do think that it's possible that we get to a 15 or 20% rate again. And 10 is not actually 10% is not actually the new normal. Now, again, I could be wrong on this. I don't really know. I don't have a lot of insight that other people wouldn't have here, but I'm keeping a close eye on this. And I just basically think they have so many ways to win here on the growth front that I think that at some point some of them are gonna land. Anyway, that's it for the risk video today. Hopefully you guys got some value out of that. And if you think there's some risks that I'm missing that you'd like me to talk about, then please post those in the comments. Thanks very much.